everyone. This is Daniela Cambone, and welcome back to the Daniela Cambone Show. Now on ITM Trading, we are continuing with our coveted Outlook 2024 series. And how could I not invite to the show E.B. Tucker, author of Why Gold, Why Now, and of course of the brilliant Tucker letter, his newest newsletter. We'll learn all about that. E.B., always good to see you.
Thanks for having me.
I was going to say you are officially retired now. Like the newsletter, the Tucker letter is your baby now.
Yeah, that's what I'm up to. People ask all the time, "What are you doing?" ebtucker.com. The Tucker letter is comes out twice a month, and it's I'm pouring everything I have into it. As
Yeah.
you know, I've written for a long time. I've written a lot of different newsletters, and I think the confusing thing was I had a few years where I was serving on three different boards, and I'm really retired from doing that starting the new year, and that's a very positive thing. I told those companies, like many months in advance that I really wanted to transition to writing is really what I do, and that's 100%. So I mean, I'm now entering the new year. That's my exclusive focus. You can't find me anywhere else. That's ebtucker.com is the only
Besides
place
this show.
that you can find me. Yeah, well,
Well,
this show, of course, but I like
yeah.
to connect with you at the end of the year, because it's funny, people, we're so short term thinking now, right? We think like what's going to happen next week, but the reality is that the end of the year is a great time to chart your course,
Yeah.
for what's
Well,
what's ahead.
well, we always have great conversations, just not besides finance, about really living your best life. How can you live a whole and and fulfilled life? So we love having those conversations. But let's start by talking about this great monetary pivot of 2024 that we is shaping up here. I mean, we had the Fed this week, EB, saying, look, cuts are coming. The market liked it. I mean, global shares spiked higher. Front end treasuries posted their best day since March. World currencies surged. Could the Fed be getting the soft landing they had hoped for here?
Well, okay, think about this. And I'm writing next week's newsletter. I'm talking about some specifics of this, but go back like 30 years. The Fed's balance sheet was about 1/25th the size it is now, and nobody ever heard of a Fed governor. Nobody ever would have expected CNBC to have all these Fed people, and we don't even know who these people are, right? I mean, there's all these Federal Reserve branches, these divisions, and now they have like a PR committee that puts these people on TV all the time to give all
Mhm.
these talks. Inflation is transitory. Oh, remember all these different soft landing, hard landing, all these. Okay, but the big picture gets lost. And what I'm trying to show people next week in the issue is that the reality is stock prices are going to go higher over longer periods of time. Now, if you look from like here till the spring, maybe it's going to be a little bumpy, okay? Because if you notice, the Fed is coming out and saying, "Oh, we're going to do this," and then "Oh, maybe we're not going to do this. Maybe we're not going to cut rates next year as much as we thought. Oh, there was a good jobs number. What are we going to do?" Do you see how they've got you confused, right? So
Yes.
they've got you. It's like there's
Yes.
always this lurching higher, lurching lower. The gold market, which obviously I'm on in all the time, they shot to 21, and 50 or something, and Sunday night last week, back into the 1900s. Yesterday up $50, today up $10. Okay, this would make you insane if you were trying to trade day to day, and keep up with all these different narratives, is my point. And so it's more important, in my opinion, to look at what do we want to own going out a year or something, right? Like what are we like? For instance, everybody is wanting me to give this gold price forecast all the time, and it's okay. Fine, if you want that, we could do it. But the thing is, gold is not really something that you buy that like you hope to like flip for some big profit in 90 days or something. It just doesn't work that way. And to be totally honest with you, I know this is going to shock you, but I feel the same way about Bitcoin. So like, you start looking at this world where some of these things, it's okay to own them, just to own them, because you're not really the problem with the crypto people is they're like addicted to these game, like all this like buying a Lamborghini with the profits from their crypto
Yeah.
trading or something. It's not really about that. It's like you're getting into this world where the Fed is going to make these numbers get bigger. Okay. Why are they going to do that? Okay. Well, you have this system now
Wait,
where
wait, wait. So
because
hold on.
of
Make what numbers get bigger?
these assets, the
Okay.
numbers that are attached to these assets are going to get bigger. So
Okay.
the reason why this is important is you have this system, you have this economic system, like 300 trillion in debt. Okay. If it shrinks a lot, then things start collapsing rapidly. Okay. And if you notice the last year or so, that everything has been shrinking, but not so bad, right? Like we've had a few banks blow up, we've had a few hedge funds blow up. Nobody's really that concerned. If this kept going, there would be huge problems. And the Fed's trying to say, okay, next year, we're going to ease up on these things. Maybe we're going to turn on a little bit of that cheaper money that you guys like so much. You're going to get really excited about that because look around everybody watching. Okay, get the Zillow app. Look at the Zillow app in your neighborhood and look at the houses that are for sale. They're sitting on the market longer. The prices are coming down, and try not to think that it's going to be 2008 where there's going to be plywood on the windows. It's not like that. Things are slowing. The real estate agents are having to do whatever their other job is,
Yeah.
being a waitress or something, instead of just selling real estate. And so everything slows down. And the reason it slows down is because the rates go up. And do you see how they're trying to manage this thing? So where are they going to take it? 5 years from now, the price of everything is going to be higher. Okay. The price of lunch is going to be higher. The price of Bitcoin is going to be higher. The price of gold is going to be higher. Stocks are going to be higher. Your house is going to be higher. And the Fed sees its job as to make that a pretty smooth process. I mean, if they came out and told you we're going to make the price of everything go up over the next 5 years, you would panic and you would start like trying to speculate to win off that. Does that make
But
sense? So that what they're doing,
how are they going to get those prices higher?
so the game plan is to control the rate of growth so that it's not. See, everything got out of hand after the pandemic. And the
Yes.
reason it got out of hand is because we just basically shot cash out of a cannon and everybody started like, if you worked at a company, your boss, who's like some middle management guy that drives a minivan, he was like all of a sudden a stock trader, right? So like he was like up at night trading currencies or something. So that's ridiculous. I mean, it's like things get out of hand, and I've got all these like anecdotal things that I track that kind of show me, and they're all starting to turn down, right? Like if you want to watch, you can get a watch, okay? And everybody takes it the wrong way. Like I don't really want any more watches, but I like to know what the watch market looks like because a lot of people bought watches that shouldn't have bought watches, okay?
Yeah.
And a lot of people bought cars that shouldn't have bought cars. And so as people start having to sell these things and they're no longer a car buyer, they're a car seller, everything starts to kind of like they're pulling some air out of this balloon. But they're not going to pull too much air out of the balloon. Does this make sense? Like what they're trying to do is to manage, it's like managing a drug habit. Okay, so like imagine if you're not really getting high anymore, but you're also not having withdrawals. You're trying to manage the drug habit. That's what we're doing. And so my point is they're going to manage it up because if you don't manage it up, what happens is that things deflate. And if things deflate, the whole system breaks. And
So
that's not going to happen.
they will, I mean, there's some who are arguing we will be headed towards deflationary, but you're saying they will do anything to avoid a deflationary environment.
Yeah, because why would they want a deflationary
Right.
scenario? Because what would happen is, like, for example, like, let's make this ultra simple. So you have, like a house that's 500 grand and the house went up a little too fast. Okay. But if that house goes down to 350, like, you can't move. Okay. So if you can't move, that means the real estate agent doesn't make money. The title company doesn't make money. The county has lower tax revenue, which means it can't pay people to work there. The Home Depot doesn't sell you a new washing machine. You see, everything stops.
Right.
Okay. So
Yeah.
what happens is once we went down this path of having this like ultra managed system, you're never going back. And that's when people start talking about a market crash. It's like, okay, fine. You could have like the COVID panic was 3 weeks. 3 weeks. Okay, so like if you tell me that you could have traded that, like I'm a professional person in the market, I can't trade that because you went from everything being kind of okay in February 2020 to losing 14 trillion in market value 3 weeks later and then turning on a dime and shooting all the way back. Like it's impossible to trade that because it's being done by a committee. Basically, the decision to stop that and to go back up was all by a committee. My point is you're in a managed system. Okay, so like sitting around and betting that the S&P is going to fall in half is a bad statistical bet. The more likely outcome is at the end of this decade, the price of everything is higher. The price of your food is higher. The price of your house is higher. So the question is like, what's going to be the most high? And like, let's buy that. Does this make sense? You want a
It does,
position.
but I have so many
You want
questions
a
now.
position for what's.
Wait,
But
I
one
have
more
so.
important piece. Yeah.
I mean,
One more
okay,
important
no,
piece. Okay.
please make your point, your
Yeah.
important piece.
Okay. One more. This is something people really need to understand because if you work like a regular job and you're watching this to learn, you need to understand something. Think about why the government and the Fed would want this to work. What I'm saying. Think about this. Every time you buy something and then you sell it and you make money, you pay tax. Okay? So the tax receipts need to grow. The the size of the economic pie needs to grow. All right? So I know it's crazy to think about, but the Fed actually wants you to play this game and it wants you to win. Because every time you win, you write a bigger check to the government. The government is allowed to keep functioning. So everything gets bigger. Everything is groovy. Everybody is happy. But the problem is that when it gets too groovy, they have to pull it back a little bit. And okay, wait. We partied a little too hard. We need to party just a little bit, okay? Because when we party a little bit, everything keeps going and it's very stable. Does this picture make sense?
It does make sense. So the
Yeah.
government, it's funny. I don't think I've ever had anyone come on and say this. The government wants you to win because they win,
But not too much.
but not
Not
too
too
much.
much.
Okay.
Yeah.
Okay. I have so many questions. Okay. One, if it's a managed system, going back to what we need to own, how can we have some control back in this Uber managed system? So to your point about gold, and you brought up Bitcoin, I know you were never a fan of owning Bitcoin. I mean, I just want you to clarify that point. I mean, have you
I'm
pivoted there?
changing my mind about Bitcoin because the problem is that what annoys me about Bitcoin is the crypto people. It's kind of like some of the gold people that also annoy me. It's like to me something like Bitcoin is something you own. It's like I get a little bit fatigued of the way these people talk because it's like I've never said something bad about owning Bitcoin. What I don't understand is the 12,000 other crypto tokens that people are losing their mind about all the time. You get to a level of wealth where you've got to own certain assets. And it's like with gold, like I'm not a gold trader. Of course, I'm watching the spot and futures market all the time. And, I own royalty stocks and all these. I have a favorite royalty stock, obviously a company that I helped, get off the ground. I like royalty. Okay, so but I don't like ideological gold people because I don't feel a connection with them. Like you own some gold because you just own it. It's not you're not trading the gold market for some hoping for to a profit to buy like a Lamborghini or something. And a
Exactly.
lot of the crypto people I feel like are not. The thing people need to understand is like, are you trying to speculate and gamble, or are you trying to become a person of means
But
and to live a
okay,
stable
but let
life?
me let me ask you
That's the
this.
question. Yeah.
How about all this talk that's emerging about, you saw even what Jamie Dimon said, that if he were the government, he'd pull the plug
I
on
get it.
Bitcoin,
I get
Elizabeth
it.
Warren. I mean, is that not a
Yeah.
concern for you
Yeah, of
that they
course.
could just pull the
I'm not.
plug?
Well, yeah. I don't think you can pull the plug on it. But I think okay. So like, you get to a level of wealth where you say like, yeah. I mean, if you are a certain size person, and you own a couple of Bitcoin, I don't think it's that crazy. I mean, I think it's qualifies as a hard asset in our era. And the problem with the crypto people is that they're so ideologically obsessed with all these narratives around their community that they're not good asset owners, right? See, the thing is that once you become wealthy, and if you're watching this video, you're wealthy because you have time to learn. Okay, so think about it, like Maslow's hierarchy of needs. You have time to learn something on a video, you're rich. All right, now you got to stay rich. Okay, and everybody's obsessed with like, how do I radically change my life in 1 week with some secret asset tip that EB Tucker's going to give me? It's not like that. It's like, as you grow, like as you have something positive, you get a bonus from work, right? What do you do with that bonus? Well, with a little bit, you pay tax. With a little bit, you live your life, like do something fun with your family. And with a little bit, you invest in something. And then with a little bit, you put it away into something like really stupid and safe and boring. Okay. And so, like, there were times many years ago when I was buying like one gold coin a month for $350, $400. Like, this is, going back over 2 decades. And I just would buy it because I thought it was cool. So I'm like, I buy one of these coins, toss it into a safe, and there you go. It's done. It's not like I wasn't buying that coin hoping it would go up 10 times in value and I would seem like some kind of genius. I was just thinking to myself about in the 90s when I was working construction and delivering pizzas and all these things. And I was like, I don't want to do that again, ever. I never want to do that again the rest of my life. I'm getting older. My body hurts. I'm not going to climb a ladder, but not because I'm too good for it, because you evolve, right? So my point is, a lot of these people, these crypto people, bothered me because I would listen to them and I would think, look, I mean, you're obsessed with an asset, okay? So like, but if I was advising someone that was worth 100 million bucks, I'd be like, yeah, you got to own some gold, you got to own a couple Bitcoin. I mean, like, this is the world we live in. You got to own
And
some
this is
real
a
estate.
completely different
Yeah,
conversation, but I mean, you really would own them, and I don't want to put in my opinion, but for entirely different reasons here.
yeah. I mean, your job, okay, so like if you're trying to be involved in markets, your job is to create and manage wealth. That's your job. And so like if you're falling in love with certain assets and becoming like hysterical on message boards about the assets, you're not doing a good job. And guess what's going to happen to you? You're going to lose money. That's what's going to happen because you've got to be completely objective all the time. You have to be willing to change your mind when the facts change. And if you can't do that, you'll never be successful. Because what will happen is you won't be able to see anything else around you, and you'll walk right into bear traps all the time, over and over again.
But it has to mean, I mean, central banks are buying gold. It's almost like an enough said
Correct.
statement, right? Central banks are
The
buying
gold
gold. And I
price, the
would
gold
love for
price
a journalist one day to
is
ask
way
Jerome
behind.
Powell, why are central banks buying so much gold?
Forget about it. Journalists don't do anything to help you predict the future. Okay, that's why I've always liked writing newsletters, is because you say things that are inherently your opinion, and
Mm-hmm.
you're looking around at the world and you're making a
Okay.
conclusion. And a journalist writes about what already happened in the past. Now, by the time the journalist writes that article, the gold price is like 4,000. I mean, the gold price is not that exciting of an asset, right? It's not an innovative new asset. It's like thousands of years old and people trust it and people own it. And to your point, they're always going to own it. Like, it's not going to go away. Like a digital gold doesn't replace physical gold. The reality is that people want to own physical gold. It's not going to change, but the gold price is way behind. So if you look, it's like the price is lagged. The stocks have lagged. It's way behind. It has a little bit of catching up to do. And I think people get overly excited about that. Like they say, well, oh, okay, I'll speculate on that. But it doesn't make any sense. I mean, it's an asset category to own, but it's not the only asset category to own.
Let me bring up what's going on in Argentina with you because I want to get your thoughts on this. We see the beginning of Milei's shock therapy, devaluing currency, 50% as the inflation races towards 200%. I think the question that I want to bring up, or the thought more than a question, is in the US, in Canada, in Europe, we'll often hear, well, that wouldn't be a reality for us. We wouldn't wake up to have our currency, slashed in half. What do you say to those folks?
Well, I wrote a whole story, the last issue of the newsletter, which people can read for free, by the way, at ebtucker.com. It's all about Argentina. I was there. And so I was writing about my lunch, and how I paid for my lunch. And so the headline that they devalued the currency, it's not really, it didn't really happen, okay? Because what happened is they already had a system where they had like all these different exchange rates. So my friend Alex, that has a magazine there, was telling me that like he can't get. So I was getting pesos at 900 to 1, and the official rate was 350. And Alex said he can't change his money for less than like 1400 because they had this like gigantic system where everybody had a different exchange rate. And so what Milei announced the other night was they changed the official exchange rate, from 350. But it was the only people that paid 350 was like ignorant American tourists that use their credit card to pay for hotels or something. Like I explain and show a picture of the hotel that I stayed in. If you paid with pesos, you saved like 60%, on the hotel. And so you had to the problem is you had to go around and get the pesos. It took like 2 hours when you get all these pesos. And then I brought them back and the guy pulled out a cash counting machine and cashed it all. But okay, so Argentina essentially was having 0.5% a day inflation. So like, it's $100, for your lunch. And the next day it's $100.50, So like every single day it goes up like that. And the reason is so obvious, right? It's like even average people there are like, well, we spent money we don't have, and that's why the new incoming government's like, there is no more money, right? So, but the question is going to be like, what are they going to do now? I mean, to straighten this thing out causes immense pain. It means that subsidies are cut and
Yeah,
spending is cut, and it
yeah.
sounds great, right? Like
That's what
the
he wants
average
to do.
American's like,
But
no, everybody's like, yeah, yeah. In
But yeah, but
America,
I
they're
mean,
like,
listen,
yeah,
the everyday Argentine has embraced this. I mean, the investors are embracing what's going on in Argentina.
yeah. Well, okay, look. Everybody thinks it's a good idea to eat less and join the gym and lose weight, but January 2nd, when the protocol starts, let's see how many people show up, and start, hitting the treadmill. So it's obviously now to the point where it has to be done, because otherwise, like, you're in trillions of dollars, for your house down there or something. But like, let's see if they can do it, because the Americans should understand and watch, because we have the strongest currency, okay? And the reason why we have that is because we have, nuclear powered subs all over the world, enforcing. We have strength, okay? So like we have that position. And in 2022, early 2022, we were in danger of losing that position, right? So we're trying to manage that. I mean, that's part of what the Fed is doing, right? You're on top. You have primacy. So you have to manage that. I mean, Argentina is a $600 billion economy or something, and it's like, it's not the same. I mean, there is no Argent. I mean, Paul Singer, people, took the Argentine naval vessel when they had a dispute over the bond repayment. This is one of the best stories in the history of finance. And nobody's doing that to a U.S. destroyer. Okay, so believe me, like, that's not going to happen. So it's important to watch, because it's like a 1/40th of the size of
Well,
the U.S.
that's so for you. I mean, there's for many people, walking around thinking, well, the US dollar is just going to continue to be strong forever. It's the almighty dollar. The empire will never come down. I mean, I guess I'm trying to get to what's your response then to
Comes
all that?
down slowly. It comes down slowly. Okay, so like you don't lose that overnight. I mean,
Right.
in fact, sometimes it's more than a generation. And so betting on the empire to collapse is a bad bet. And so let's talk about that in Argentina. How many times did I sit through a presentation about somebody telling me to bet on Argentine stocks? Okay, yeah, I mean, talk to Templeton, talk to Fidelity, talk to all these people that ended up unable to get $100 million out of there. It's like, I mean, I've been involved with mining and royalty companies where you have this project and then you can't get the money out of the country and all this stuff. It's a total nightmare. So my point is like, betting on these gigantic things to happen is really dangerous. And and then it's like you have to ask yourself, like, well, what's the bet? I want to bet. If you go to a casino and you don't say what's the worst odds in here, like they'll have like a Corvette. You can pull a thing at the front of the casino. You're not going to win that. So basically, what's happening is that people need to say, I've got to pay attention to this so that I understand the mechanics. What it's the U.S. dollar in our lifetime. Betting on a collapse in the U.S. dollar is a low odds that you'll be successful on the timing. More likely is that the U.S. has to do increasingly dramatic things to maintain the power that's attached to the dollar, and while it's doing those things, you can position to win. It's like you can. This I'm saying this in the next newsletter. Like, let's play their
Yeah.
game
Are you
instead of sitting
factoring
around
in are you
and griping
factoring
about it.
in the strength of the BRICS? I mean, you saw Putin's visit to Saudi Arabia last week. I mean, the third visit outside of China and Iran. I mean, there's a lot of
Pressure
brewing
is on.
events surrounding
The
the BRICS.
pressure,
I
the
mean,
pressure, yeah, pressure's on. And so, okay, so
pressure's
how do you
on.
play that? Well, you look at in the newsletter, I run a portfolio for a trust. I publish that in the newsletter for the subscribers. It's like, how do you play that? Well, there's ways you play it,
I want
and
to.
it's not playing a collapse in the U.S. dollar. It's like you talk about Putin. Where does he go first, right? Like, what's happening with oil? I mean, it's like there's serious opportunity in that space, and you don't have to play the crazy thing about like there's going to be a BRICS currency and you're going to benefit from it. You're probably not going to benefit from it. I mean, if you're sitting in Tulsa, like in living there or something, like you're not really going to benefit for a BRICS currency. However, the second order effects you can benefit from, because as these things shift, sometimes there's big opportunities, and that's the way to think about it from the perspective of being someone in the American system.
I know we have to wrap here soon. Um, Last year when we spoke, you were saying that you felt that there was going to be something huge that was going to break in the system. Then we saw the banking crisis, but it wasn't the banking crisis for you. I just want you to talk to that a little bit. Do you still think we're going to see a huge break, and what does it look like for you? I mean, can you shed any more light there?
Yeah, so I think so. So if you think about it, what we saw yesterday from the Fed, it tells me that some things are not good. I mean, if you think about this, it's like you have these regional Fed branches, and they're connected to the local economies there. And so, like, if you're running a steel mill or something in the middle of the country, and you definitely know who like the president of the Kansas City Fed is or whatever. It's like you're an important player there, and these people are keeping. You can see when business slows down, and all you have to do, like all day long, you can't see the other side of my office, but I'm sitting there and like I read so much stuff that people would think is boring, but you get all these anecdotal messages where like CDW that supplies computers is like business fell off a cliff. I mean, you have like people that supply parts for factories, orders have stopped. I mean, so you have all these things that start to happen. Well, why have orders stopped? Well, because at an 8% mortgage rate, the company can't build the new factory, and so they're not able to expand. They're not able to order the new conveyor system. They're not able to. So you see how this goes? There's all these effects, and they happen a bit slowly. And so I think what we saw with the banking crisis was the worst of the banks, the most exposed to rising rates, tumbled, and the system absorbed that pretty well. And I think what people realize is that the reason the Fed rates went up almost overnight is because if you slowly took them up, nothing would
Do
work.
you
And
do
so
you
now you have them straight up, and it's like you look at what's happened, and people have been kind of running through savings and cutting obvious cost. And I think once we're out of that time period, then people can't face the music. I mean, there's a lot of companies they didn't make money at 0%, and at this rate, they're definitely not making money. And when they have to roll these debts over, it's a huge
do
problem.
you
And so
trust the
it
banks?
makes sense. So when I was a kid, you have my grandfather was involved with a bank, so I was at the bank a lot, and I loved the bank. It had a vault, it had marble, it looked like a really safe place. Have you been to a bank recently? It's like interacting with like the city water department or something. I mean, it's like a cheap building. There is no vault anymore. The people are like mindless. I mean, I had to send a wire last week, and the lady gave me this lecture about people hacking my computer or something. I'm like, what do you guys even do? I mean, there's no money in here. It's basically what the bank is now is it's turning into like a Western Union office where you go in and like get a money order or something like that. So increasingly banks do nothing. Guess who's doing all the lending? Private credit. There's $1.7 trillion of unregulated lending by private credit. And all these in the know hedge funds and all these people that you and I know are involved in this space. And what they're doing is they're taking over the function of lending. So banks increasingly are a place to take like quarters that your kid collects from the lemonade stand and nothing else. It's not the same business.
I want you to wrap with a message here as we head into the new year. I know you hate New Year's, but
Well, I'm writing about that. So at
but
the end of the newsletter,
yeah,
by the way, for subscribers, after I sign off, there's a section where I write about life stuff, and it's turning out to be people's favorite part. But the title of this section is why I don't set resolutions.
that's
And
right.
I don't want to give it all away because it's for the subscribers, but basically I don't like New Year's, and people are always upset about that. They're like, why don't you like New Year's? I'm like, look, I mean, I didn't have any bad experience with New Year's. It's just that if you want to change your life, do it today. Don't be saying like, oh, I'm going to do something in a few weeks because there's a holiday. Like if you want to make a change in your life, if you want to do something different, do it right now. And that's the best time to do it. And what you start figuring out is that successful people do that. But people that are not successful, they like hope and wishing and dreaming about a better outcome, but certainly not going to
Yeah.
do anything about it.
Well,
And so do your resolution today.
I wanted to say I thought of you when I was at Lynette Zhang's home, and I was like, Evie Tucker has to come over because basically you guys would be best friends because she has everything you absolutely love. You know, the fresh chickens, fresh
There we go.
eggs, raw
Yeah.
milk. She grows everything she eats. I mean, you two are like soul brother and
Let's
sister.
do
I'm telling you.
let's do
We'll,
a next year. Let's do an interview in person,
we'll
and
do a
and
new
we'll
segment
you know
where
yeah,
I
I like
invite
that.
people over to. I crash Lynette's house and I invite my favorite guests over.
Yeah,
Brilliant. Uh,
I like it.
Evie, I love speaking with you. Um, I wish you continued success in your retirement and with the Tucker letter. And I urge everyone to read Why Gold, Why Now. He makes the case of really a brilliant case of why everyone really should own some gold. Evie, thank you and happy holidays. Merry Christmas.
Happy holidays. Yeah, and look forward to seeing you next year and having a profitable 2024.
Absolutely. Profitable, healthy 2024. Evie Tucker, thank you. And thank you all for watching. I hope you're enjoying the Outlook series because I absolutely am. I love all these conversations. So be sure to sign up at danielacambone.com so you don't miss a beat. And we'll see you soon. Thanks for watching.